Good morning, everybody, and welcome to the Siler Wealth Management video blog. Today is Tuesday, June 21st, and before I go any further, just want to let everybody know that we do have our Stock Market Jitters event in our office tonight. We keep a very, very small group. We're really just, a few people. We do have room for maybe two more. We'll fit you in, so two more if you want to attend tonight at 6:30 in my office in Longwood. But you need to call. You need to call the office, so I'll get that out of the way right now. 407-831-8002, and reserve your spot. Starts at 6:30. We'll have some more dervs there as well. All right, now let's go on and talk about what happened last week, and then we'll look about forward for this week. Last week, the markets were down about 1% across the board. A lot of concern about the Brexit, which is the British exit from the European Union. And that was a concern. And last week, it seemed like there were more votes in favor of exit. And then over the weekend, kind of things changed. It was more of an even keel now. So yesterday's rally was really attributed to, it looks like the Britons are not going to exit the European Union. Now, how does that affect us here? Well, first of all, everything affects us here. If somebody in Russia sneezes, we catch the cold. So that's how things work. But let me be more specific. If Great Britain exits the 28-nation European Union, that would be more of a risk to that country. Okay, there'd be some risk there associated with that. So their currency, which is the British pound, would likely drop significantly. Okay, you'll have some pressure on the British pound. What would that do to our currency, the dollar versus the British pound? Well, if the British pound is dropping, we don't even have to budge, and we're going to be rising, okay? So we'll be going up against the British pound. So what does that do to any of our exports going to Great Britain? It hurts us, okay? When our dollar rises, it hurts exports as far as the amount of money and the currency translation, the amount of money that our companies are multinational companies, and there are a lot of companies that we have here in this country that do business with Great Britain. So that would hurt, consequently, their corporate earnings, and would trickle down, of course, to more than likely their stock prices. So the reason why Great Britain was threatening or is threatening, I mean, the vote is going to happen on Thursday, on the 23rd. There will be a vote. And the reason I believe, and this is just my belief, that they're threatening to get out of the European Union, it's because they want to try and negotiate a better deal on their own, or they're threatening. I don't know if they're idle threats, but right now, they're a 55% export company. So Great Britain does export a lot of stuff. So that being said, I tend to think that they would only do that if they can negotiate a better deal, and it would take years for this all to get negotiated out. So I don't know. We'll see what happens. The likelihood is now that they probably will not exit the European Union, so that's why the markets rallied yesterday, and we are indicating a little bit of a rally today. But the rally kind of petered out yesterday. We had a good 200 plus point on the Dow, and everything was chugging right along. But by the end of the day, we started losing some momentum. So we may see that again today. I still think the market's a little bit shaky. I think that the stock market itself, the actual overall S&P 500, is probably very fairly valued. It's by no means undervalued. That's why I don't think you have a ton of risk here. I think 4 to 8%. I've been calling for this correction. We did see it drop about almost 3%, and then we rallied the last yesterday actually, but we were down 1% last week. I anticipate that the Fed will probably, and again, it's a coin flip in July in that July meeting, but I believe the Fed may stand put and not raise rates in July as well. They probably should, but they are likely not going to, because they did have concerns about the jobs report. Now, we'll see what happens with that July jobs report, and they'll have a better idea of what they're going to do. So here's what we're doing. Look, stocks like Disney had a pretty good day yesterday. And why is that? Because the NBA Finals had the best audience. I think over 30 million people saw it. Best audience since 1998. And it happened to be on ABC, which is a Disney property, which is interesting because usually the NBA is on NBC or another network. But so they benefited from it. They also had a blockbuster movie come out over the weekend, and that got the stock back up to over 100. So look, I think that Disney's probably a value here. I'm not telling you to go out and buy it because I don't know your situation. We do own Disney. Just want to let you know we own it. We bought some pretty cheap, and we do own some a little bit higher too. So, but it's probably a decent value. I think you probably have some upside, but again, it's a situation where everybody thought after the accident it had last week that stock was in a tank. Oftentimes when you think something's going to happen, the market gives you the opposite. Okay, the market thinks differently than you or I. The market oftentimes has its own mind, and you never know what's going to happen. So that's why I love to see these people saying, when they tell me, well, I'm paper trading on E-Trade and all that, I find that amusing because it's really easy to paper trade. Because when you paper trade, you have no risk. You can pile on this one stock and hopefully it works out, but you have no risk. And you have to mitigate risk if you are concerned and you are one of these investors, which we have quite a few of them that are pre-retirement or in retirement age. Your risk level has to go down. So anyway, let's take a watch the rest of the week. I think that we're going to be in a narrow trading range. We rally a little bit today, but I don't know if that's going to be sustainable. I haven't really done a lot of accumulating of anything. I'm looking for ideas that are going to generate portfolios 4, 5, 6% in just dividends and income. We are loading up on that kind of stuff because right now I think the market is shaky. We have increased our cash position in the portfolios. There is a healthcare stock I do like a lot, and I did do a little buying in that yesterday, but that's about it. And I'll disclose names at another time. If you guys want to hear about it, email me. In the meantime, I hope everybody has a great day. And again, if you want to participate tonight in our stock market jitters event, it's going to be really informative. We'll knock it out in about an hour and a half and take some questions after that. We're located right here in Longwood on 434, right between Longwood and Altamont. So give us a call again, 407-831-8002. I hope everybody has a fantastic day. I'm Lee Seiler. StockDoctor.com is a website. A lot of resources on there, so you got to check it out. StockDR.com and Seiler Wealth Management. We can help you with your IRA rollovers or your retirement accounts, trusts, anything like that. We are available and willing to help, and we'll do a good job for you. In the meantime, everybody have a fantastic day, and I'll talk to you soon.